Hi, it's Austin Eaton with Coldwell Banker Realty. And today in our Market Watch, we're going to take a look back at 2019 and a little look in our crystal ball for 2020. Okay, I'm going to have you join me here on my desktop, and I'm going to try not to bore the heck out of you. So let's take a look at some numbers that just came out from Minnesota Realtors that summarize December's numbers versus last year, and then 2019's numbers versus 2018. So let's whisk through it and look at some of the important pieces. First of all, December's market was actually ahead of last year, and I think part of that is that it was a tough year for buyers, and they're looking for any gaps. There are fewer buyers out there right now, and they're able to find some deals. So median sales price went up from 263 to 285. That's an 8% increase in median sales price in December year over year. For the whole year, we're up 6.7%. Those are important numbers for home buyers and sellers. We've got new listings that have come on here in December that outpaced 2018. Closed sales, again, outpaced 2018. Original sales price received in a seller's market, it's always going to be hovering right around the 100% mark. And then here's a big piece of the puzzle. And you look at the amount of months of supply. A normal balanced market is between 4.5 and 6 months of supply, depending on who you talk to. We're at a crazy low 1.3 months of supply here at the end of December going into January. We expect that to come up possibly into the 2s, but that's still a seller's market any way you slice it. If you look at the bottom here, you can see the overall graph of average price or median price for homes sold, both for the Twin Cities and statewide. Let's take a look at the next slide. If I can get it to do it, that'd be fantastic. Okay, let's do that. Now, median sale price, you can again see for the South Metro here, we've got Lakeville, Rosemount, Apple Valley, and Eagan. And let's see, Apple Valley, Eagan, and Rosemount all outpaced the state or the 7-county metro rate of increase. And then the highest line on here is Lakeville. It is still well ahead of average values in the area, but did not outpace the 7-county metro or any of those other cities in growth in 2019. If you look at some of the increases for the last 5 years, Dakota County, anybody owning property in Dakota County for the last 5 years has seen an average of 27% increase. Hennepin County, 27 as well. Scott County, only 24.5% increase in property values over the last 5 years. And then Ramsey County leads the way with 30.9% in the local counties increase in this 5-year period. A couple of outliers here, Wilkin County, and I'm not even sure where Wilkin County is, 181% increase. Rock County, 14.1% decrease. So not a great performance there. Some people talk to me about how, the market is really slowed down in the high end. And the market is slower in the high end than it is in the low end, and I'm talking about $1 million homes versus $250,000 homes, but it's still improving over time here. So let's look at the $200,000 to $350,000 home. Median days on market have gone from 2016, they were in the 35 to 40 range. Now they're down under 20 days. So you better get on it fast if you're buying in that segment. The $350,000 to $500,000 range, median days on market are down as well. They went from 50 to 60 days down to the 30-day range. So again, you're dealing with heating markets that in terms of days on market are going down, which talks to the lack of supply and talks to the amount of buyers that are out there ready to buy. Next one, this is more volatile. partly because you see the red line, that's Dakota County. There are fewer properties above 500,000, particularly before 2018 when the higher end building boom really started in Lakeville. So the volatility there is really just due to sample size. But you can see overall on these curves, time on market goes down between 500 and 750 as well. And then the last one along these lines is the 750 to 1,250,000 price range. And again, the red line is more volatile than the blue line, and that is because of sample size. But overall, you'll see time on market going down. So that tells you that even in the high ends of the market, time on market is going down, which means it's a healthy market. Biggest inventory, biggest issue for 2018, 2019, now going into 2020, the amount of homes on the market. As I said before, a balanced market is 4.5 to 6 months of inventory. And inventory is the amount of homes that are on the market and how long it would take them to sell if no other homes were introduced to the market. So essentially our inventory is how long that inventory would last with no new additions. Another really, really big part of our market dynamics right now are the low interest rates that we're experiencing. We're at between 3.5% and 4% right now, historically low. We're not at the absolute bottom of mortgage rates, which we had found in 2012 and 2013, but right now, money is cheap for buyers, and that is bringing more people out, and it is making sure that we go through our inventory pretty quickly. Buyers sometimes right now are sitting on the sideline because they're afraid they can't find the home they'd like, and they're waiting for the balance of the market to change more to being a buyer's market or a balanced market. And I can understand that thinking. The problem with that thinking is that in order to get to a more balanced market, you're going to have to see significantly, easy for me to say, significantly higher mortgage rates. So interest rates of 5, 6, 7% would bring this market to a better balance. And great, buying in that time, you'd probably have more selection, but you're going to pay a lot more, up to 20% less buying power with higher interest rates. So it's best for these buyers to jump into the market now if they've been hesitating. It may seem counterintuitive because there's not a lot to choose from, but when there's more to choose from, your money's going to be more expensive and it's going to be harder to afford as much home as you can afford today. Okay, so if you're still watching and you're still awake, I really appreciate your sticking with me here. And I wanted to summarize everything that we went over. Basically, for 2020, I expect the market to be fairly similar to what it's been the last couple of years, which is undersupplied, but stable because of low interest rates. I expect that we'll have competitive bidding situations in the prices under 500,000, so we'll have multiple offers in almost every circumstance. We'll even see some multiple offers in the 500 to 750 range, and even above that if the property really is compelling and compellingly priced. If you know of anybody who can benefit from watching this long video, please send it to them. And if you know of anybody who might be looking to buy or sell this year, I certainly would love to be able to help them out. Please share my information with them, or please give me a buzz and let me know how I can help them. Thanks.